Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what companies are really saying when they file all these official documents with the SEC. And sometimes they just want to talk about how well they're doing, but other times they're trying to tell you something else completely. And today we have a report from the world of investment, specifically an annual shareholder report. It looks like this fund has had a bit of a wild ride and we have a lot to unpack in this one. Stick around because we're going to break down what this fund is really telling us about its performance, its strategy, and what it all means for your investments. And hey, if you want to stay ahead of these financial deep dives, make sure you are subscribed to the channel and join our Discord community for more exclusive content and discussions with other finance enthusiasts. The link is in the description below. So this document is an annual shareholder report for something called the Clockwise Core Equity and Innovation ETF. Basically, it is a report card for this investment fund for the period ending the 31st of August 2025. It tells you how the fund performed, how much it cost to invest, how it is invested, and what the big picture looks like for the company managing it. Alright, let's dive into how this fund is actually doing. They're showing us the cost of investing a hypothetical $10,000. For this fund, the Clockwise Core Equity and Innovation ETF, the total costs were about $138, which works out to 1.31% of that initial investment. That is not just the management fee, it includes all the little fees that add up. Now the question is that cost worth it based on how the fund performed? This table is really interesting because it shows on an initial investment of $10,000 what your money grew to or shrank to over time. By the end of August 2025, our $10,000 investment turned into $14,455. That is a gain of over 44%. Now compared to its benchmark, the S&P 500 Total Return Index, that same $10,000 would have grown to $15,768. So in this period, the fund did not quite keep up with the broader market. Digging through the dates, we see some ups and downs. Look at the end of 2022. Our $10,000 investment was down to about $6,436 in the fund, while the S&P 500 was at $9,014. That is a big drop. But then it started climbing back up, and by August 2025, it reached $14,455. These numbers show a fund that has been quite volatile, but has managed to grow the money over this extended period. Now let's look at the average returns. For the year ending the 31st of August 2025, the fund returned 11.39%. The S&P 500 Total Return Index returned a higher 15.88%. Over 3 years, the Clockwise Fund did better, returning 23.62% compared to the S&P 500's 19.54%. And since its inception back in January 2022, the fund returned an average of 10.80% per year, while the S&P 500 returned a higher 13.52%. So the fund had some periods where it outperformed, but over the long haul it lagged the overall market. The report explains that this past year was all about artificial intelligence and the Federal Reserve being more relaxed about interest rates. Big tech companies got a lot of attention due to investments in semiconductors and data centers. The Federal Reserve kept interest rates low despite inflation worries. This combination of tech excitement and easy money pushed stock market valuations really high. However, the report highlights several things that might have held the fund back even with those good returns. They mention that big tech companies are not growing their earnings as fast as they used to. Also, there are worries about people paying back their debts and a rise in defaults. The market valuations are getting really stretched even though growth is slowing down. They also point out that the big tech deals might not be as solid or as transparent as they seem. And finally, there are a lot of expectations for interest rate cuts, but inflation is still a problem and trade issues could pop up again. So what is the fund doing about all this? Well, they are rebalancing their investments, moving some money from long-term tech stocks to more defensive sectors that are less sensitive to interest rate changes. They are also adding some smaller companies that could benefit from lower interest rates, and they are selling some of their best performing stocks to lock in gains and reduce risk. They are also increasing their investments in things like preferred stocks and dividend-paying stocks to generate more income. And they are spreading out their investments to avoid putting too much money into just a few companies. Let's look at some key stats as of the 31st of August 2025. The total size of the fund is about $20.1 billion. It holds 40 different investments. The management fee alone was a hefty $213 million. And something that really stands out is the portfolio turnover rate, which is 15.55%. That is an incredibly high turnover rate. It means they are buying and selling a huge portion of the fund's holdings very frequently. This can lead to higher transaction costs and potentially more taxes for investors. Looking at where the money is invested as of the 31st of August 2025, the largest slice is in technology at 0.268%, which seems quite low for a fund focused on innovation and technology. Then there is communications at 0.211% and consumer cyclical at 0.088%. It is a bit unusual that these are such small percentages. Usually when a fund says it focuses on a sector, the percentage is much higher. This might indicate that the fund is actually investing in other investment funds called ETFs, which then hold these sector-specific stocks. For example, there is a significant portion in exchange-traded funds at 0.075%. Now let's talk about who they actually own. The biggest holding is an investment called Strategy Inc. with a 10% interest making up 6% of the fund's assets. Then comes Spotify Technology SA and Apple, Incorporated each at 5.1%. Netflix Incorporated is next at 5%, followed by Newmont Mining Corporation at 4.9%, and Nvidia Corporation at 4.2%. United Health Group Incorporated is at 4.1%. Then Upstart Holdings Incorporated and CoreWeave Incorporated both at 3.2%. And finally Strategy Inc. again with an 8% interest at 3.1%. It is interesting to see a mix of well-known tech giants alongside companies like Upstart, which has been quite volatile. There were some changes made to the fund's prospectus effective the 13th of August 2025. They updated the section on how they invest. Now, the fund will invest at least 80% of its assets in equity securities like stocks and other ETFs. They can also invest up to 95% in these securities. Importantly, they are now saying they will also invest between 5 and 20% in fixed income securities like short-term treasuries and money market funds. This means they are adding some safer investments to the mix to potentially reduce risk. They also added disclosures about the risks involved with investing in leveraged and inverse ETFs. The company has adopted a code of ethics for its top executives. They said they did not make any significant changes to it during the reporting period, and no one was granted any special exceptions. They have an audit committee, and they believe they do have at least one person on that committee who is a financial expert and is independent, meaning they are not too closely tied to the company's business dealings. Mr. David Norris is specifically named as this financial expert. This section talks about the fees paid to their accountants Cohen and Company Limited for the fiscal year ending the 31st of August. 2025, the audit fees were $13,000 and tax fees were $3,000. For the previous year ending the 31st of August 2024, the audit fees were slightly higher at $15,500. They also stated that all the audit work was done by full-time employees of the accounting firm. Importantly, they also mentioned that they did not have any other fees beyond audit and tax services with Cohen and Company Limited, which is good to see for maintaining auditor independence. This confirms that the company has a dedicated audit committee as required for listed companies, and they list the independent members of that committee, Javier Marquina McDonough and David Norris. This just tells us that a detailed schedule of all the fund's investments is included in the financial statements later in the report. This is where the real nitty-gritty financial details are. They've included the schedule of investments, the statement of assets and liabilities, the statement of operations, the statements of changes in net assets, and the financial highlights. Let's look at what they own. At the 31st of August 2025, about 82.2% of the fund is invested in common stocks. They list a lot of different companies. For example, the aerospace and defense sector includes Boeing Company and General Electric Company. The auto manufacturers sector includes Tesla Incorporated. In the computer sector, they hold Apple Incorporated. For internet-related companies which make up a significant 21.1%, they hold Amazon.com, Incorporated Chewy Incorporated Mercadolaba, Incorporated Meta Platforms Incorporated Netflix, Incorporated PDD Holdings Incorporated, and Spotify Technology SA. They also have investments in semiconductors making up 6.5%, including Broadcom Incorporated, Micron Technology Incorporated, and Nvidia Corporation. And in software, they hold CoreWeave Incorporated and Microsoft Corporation. The total value of these common stocks is over $16.5 million. They also hold preferred stocks like Strategy Inc. with 8 and 10% yields, which together make up 9.1% of the fund. They also have investments in exchange-traded funds totaling 7.4% of the fund's assets. This includes things like Direction Daily Semiconductors, Bear 3x Shares ProShares Ultra Pro Short Dow, 30 ProShares Ultra Pro Short QQQ, and ProShares Ultra Pro Short S&P 500. This is quite telling because these are inverse or leveraged ETFs which carry much higher risk. Finally, they have a small portion in real estate investment trusts and some in money market funds. Looking at the fund's balance sheet as of the 31st of August 2025, its total assets are over $22.2 million. Their liabilities are around $2.1 million. This leaves the fund with net assets of about $20.1 million. The net asset value per S-Share is $23.66. The cost of their investments was just over $19 million. So the market value of their investments is higher than what they paid for them. For the year ended the 31st of August 2025, the fund brought in about $331,836 in dividend income. After expenses, which included a substantial investment advisory fee of $213,855, the net investment income was $35,576. More significantly, the fund had a net realized gain of over $3.3 million from selling investments, and from in-kind redemptions, which is when investors exchange their shares for the actual stocks held by the fund. However, they also had a net change in unrealized depreciation of over $1.5 million from investments that lost value. Overall, the net result for the year was an increase in net assets from operations of over $1.8 million. This table shows how the net assets of the fund changed over the past 2 years. For the year ending the 31st of August 2025, the net increase from operations was $1.8 million. However, they paid out nearly $4.9 million in distributions to shareholders. This means they distributed more than they earned from operations. They also had a net increase of over $1 million from capital transactions, which is essentially new money coming in from investors, buying shares minus money going out from investors, redeeming shares. In total, the net assets decreased by about $2 million for the year. This is in contrast to the prior year when net assets increased by over $4.8 million. This table shows the performance per S-Share for the year ending the 31st of August 2025. The net asset value per S-Share was $23.66. The total return for the year was 11.39%. The ratio of expenses to average net assets is 1.31%. This expense ratio has remained consistent at 0.95% for the previous 3 years, excluding tax expenses. Now, the portfolio turnover rate for the year is an astonishing 15.55%. This is extremely high and indicates a very active trading strategy which can lead to higher costs and potential tax implications for shareholders. The fund is basically a part of a larger trust called Tidal Trust II. Tidal Investments LLC is the main investment advisor, and Clockwise Capital LLC is the sub-advisor. The fund's goal is to achieve long-term growth of capital. This section details how they value the fund's investments. They generally use the last quoted sale price on the main stock exchange. If a price isn't readily available, they use other methods to figure out the fair value. They also talk about a 3-level system for valuing assets based on how observable the prices are in the market. Most of their investments are in level 1, which means they are valued using readily available quoted prices in active markets. For example, their common stocks, preferred stocks, and exchange-traded funds are all in level 1. This suggests that their portfolio is made up of fairly liquid and commonly traded securities. It looks like this fund underwent a reorganization. As of the 21st of June 2024, it was transferred from a previous entity to Tidal Trust II. The report states this was a non-taxable event for shareholders, and that the cost basis of the investments was carried forward. This means that for tax purposes, it is like the investments were never sold and bought again. This section is full of warnings about what could go wrong. They talk about sector risks, meaning if they invest too much in one industry like technology or communications and that industry struggles, the whole fund will suffer. They also specifically mention risks in communications, consumer discretionary, consumer staples, financial healthcare, industrials, information technology, real estate, and utilities. They are very clear that if the fund is concentrated in any of these areas, it is more vulnerable. A big red flag here is the mention of leveraged and inverse ETFs. The fund invests in these types of ETFs. These are extremely risky. They are designed to amplify the returns of an index, but they can also amplify losses due to something called daily resetting. Their performance over longer periods can be very different from the underlying index, and in volatile markets, they can lead to a complete loss of investment. The report is clear that investing in these can expose the fund to significant volatility and potential loss. This part talks about the agreements with the people and companies that manage the fund. The investment advisory fee is 0.95% annually. Out of this fee, the advisor is responsible for paying most of the fund's operating expenses. The sub-advisor, Clockwise Capital LLC, gets paid 0.04% by the main advisor. Tidal ETF Services LLC, an affiliate, provides administrative services and gets paid based on the fund's assets. US Bancorp Fund Services handles administration, accounting, and transfer agency services. Foreside Fund Services is the distributor. It is important to note that some officers and a trustee are affiliated with the advisor, but do not receive compensation from the fund itself. They also mention a 12B-1 plan that allows for distribution fees, but currently no such fees are being paid. This tells us that the fund operates as a single reportable segment. They don't break down their operations into different parts because the management looks at the fund's performance as a whole. For the year ending the 31st of August 2025, the fund bought and sold a lot of securities. The cost of purchases for non-short-term investments was over $330 million, and the proceeds from sales and maturities were over $334 million. This is another indicator of the high turnover rate we saw earlier. They also engaged in significant in-kind transactions for creations and redemptions, totaling over $17.5 million in purchases and over $15.9 million in sales. This section details the tax implications for shareholders. For the year ending the 31st of August 2025, the fund distributed about $4.8 million to shareholders. A large portion of this, nearly $1 million, was designated as long-term capital gains, which are generally taxed at a lower rate than ordinary income. The report also gives details on the tax character of distributions, showing how much was ordinary income versus capital gains. The net tax unrealized appreciation or depreciation is also calculated, showing a net depreciation of over $311,000. This explains how investors can buy and sell shares of the fund. Shares trade on an exchange, and their market price can differ from their net asset value. Most investors buy and sell shares on the secondary market through a broker, not directly from the fund. They have a fixed transaction fee of $300 for buying or selling large blocks of shares called creation units, and sometimes a variable fee of up to 2% for cash transactions. The report acknowledges the recent volatility in financial markets due to economic and geopolitical factors like inflation, interest rate changes, potential recessions, trade tensions, and conflicts. It warns that these events can negatively affect stock prices and market liquidity. The management has reviewed events that happened after the 31st of August 2025 and has concluded that there are no significant subsequent events that require further disclosure or changes to the financial statements. This is the auditor's report, in this case from Cohen and Company Limited. They've audited the fund's financial statements and stated that, in their opinion, the statements present fairly the fund's financial position and performance according to generally accepted accounting principles in the United States. They also note that they have served as auditor for other Tidal Investments LLC companies since 2020. This part provides additional tax information for shareholders. For the year ending the 31st of August 2025, a small percentage of dividends paid by the fund were classified as qualified dividend income, which may be taxed at a lower rate. It also mentions the percentage of ordinary income distributions that qualify for the corporate dividends received deduction and the percentage designated as short-term capital gain distribution. There were no changes in accountants or disagreements with them. No matters were voted on by shareholders during this period. This refers back to the financial statements and mentions that the advisor pays all expenses, including trustee compensation, except for specific excluded items. This section is not applicable to this filing. This item is not applicable to open-end investment companies like this one. This is also not applicable to open-end investment companies. Again, this does not apply to open-end investment companies. This is marked as not applicable. The company's top executives have reviewed the disclosure controls and procedures and concluded they are effective. There were no changes in internal control over financial reporting that materially affected the company during this period. This is also not applicable to open-end investment companies. This section is not applicable. This lists the exhibits being filed with the report, including the code of ethics, certifications, and other required documents. So, what is my take on this report? The Clockwise Core Equity and Innovation ETF has a very active trading strategy, as indicated by that sky-high portfolio turnover rate. While they delivered a positive return of over 11% in the reporting year and did better over 3 years than the S&P 500, they ultimately lagged the S&P 500 since inception. A major concern is their significant exposure to leveraged and inverse ETFs given their inherent volatility and potential for substantial losses. This, combined with the high turnover, suggests a strategy that is likely to experience significant swings. The diversification within the fund seems to be achieved heavily through other ETFs, which adds another layer of fees and risks, while they are adding some fixed income exposure to potentially reduce risk. The core strategy appears to be quite aggressive. For an investor seeking stable, long-term growth, this fund might be too risky due to its heavy reliance on volatile instruments and its active trading approach. The fund's net assets actually decreased in the last year, even with positive operational results, because they paid out more in distributions than they generated from operations. This might be a signal that the fund is trying to return capital to investors, possibly due to market conditions or a decision by management. Alright, that is our breakdown of the Clockwise Core Equity and Innovation ETF's annual report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.